Hi there, and welcome to this farm accounting system walkthrough. Now, in this video, I'm going to give you a complete overview of how the system works, how transactions are recorded, and how the data flows through the system, and also how it ultimately produces your financial reports like the income statement and the balance sheet. So by the end of this video, you should clearly understand the structure of the system and also how all the different parts connect with each other. Now, at a high level, the system is built on a very simple flow. We start with recording the transactions, and those transactions flow into a central data sheet or a central register, and then from there the generation and from there the system generates reports automatically. So everything actually begins with what you enter, and everything else is calculated from what you enter. All right, so the system is divided into four main sections, which is the chart of accounts, the transactions register, the all transactions register, as well as the financial reports. Now, let me quickly walk you through each one of them. First, we have the charts of account. All right? So this is where all your accounts are being defined. Things like the bank account, things like livestock, expenses like feed and labor, and revenue like sales and so you will see that each account has an account code, an account name, as well as a category. Now these are very important because they are going to determine how these accounts are being recorded or captured in your different registers. So it's very important. And then also, it's also just good to know that this is what controls how transactions are classified and how they are also appearing in the reports. So once this is set up properly, the rest of the system becomes much easier to use. So these in gray are already pre-entered and preset. You cannot really change them. And we have looked at the most suitable account names or account types for farming industry. But should your particular case have other account types that we have not included, feel free to add them in here for as long as you add them within the bordered cells. All right. So, and our system has been set up to also just whatever you enter here, that it will also incorporate into its transactions setup. But when you do add your own, please make sure that each one has an account code, account name, and a category. All right. And then also you see for the expenses, the expense group. As an example, it's a direct cost, a production cost, livestock cost. And then also should that account be linked to any enterprise. So you see some say no, for some the answer is yes, because let's say for example the bank is a no because it is not linked to a particular enterprise. It runs the operations of the entire farm. So yeah, but then when it comes to the asset of livestock like goats and sheep, yes, those ones they can be linked to these enterprises. Now, the transaction type, whether it's an asset, a liability, or an equity, should also be inserted in there as you add in your new account, and then also in the normal balance. And we know that in accounting terms, um, it's important to know what to debit and what to credit. All right. So um, that is the chart of accounts. Now, next is the transactions register. And the transactions register is actually the heart of the system. So this is where you will record every financial activity. Now each transaction follows the double entry principle because this is an accounting system, right? So it follows the double entry principle, which simply means every transaction affects at least two accounts. All right, so each row represents one side of a transaction. So every transaction is going to have two lines. One transaction, two lines, one debit and one credit. And whenever you post anything, the question that you need to ask yourself is, where is the value coming from and where is it going to? So if you can't answer both sides, then the entry is incomplete. All right. So, for example, if you buy livestock using the bank, then livestock is going to increase and the bank is going to decrease. So one transaction, two accounts affected. So in the system, we capture this by using the date, the reference number, the description, the account code, and the transaction flow, very, very important, as well as the amount. Now, under the transaction flow, you are going to see received and source. So you are going to select the source will be the account where the value is coming from, and the received will be the account that is the recipient of that value. All right. So received means the account is increasing and the source means the account is decreasing. All right. So every account is every transaction rather is recorded in a balanced way. Now you'll see that there are grayed out areas. So those are areas that you do not need to type in. As you enter the information, this information that needs to come in here will be auto-populated, so that you do not have to enter everything. We have automated some of the information that we can. All right. Now, from the transactions register, all the data flows into the all transactions register. So all that information is going to flow in here. All right. Now, when it comes to this is the system's engine room. The all transactions register is the system's engine room. So it combines all the entries into a structured format that includes debit, that includes credit, that includes account details, that includes enterprise classifications and all that. So you don't usually enter anything here manually. It is automatically populated as well. This whole section, this whole register is automatically populated as well. So it pulls in information from the transaction register, as well as some other registers also, like the crops register, and you will see how it all comes together when we get through all that. All right. So it's very, very important for us then to know what it's all about. And the other one that I quickly want us to look at is the trial balance. The trial balance. Now, this is a summary of all the accounts, and the trial balance automatically pull in all accounts. It pull in all accounts as you are adding them there in the chart of accounts. All right, so it pulls the accounts in there, and then it summarizes the accounts showing the total debits, the total credits, as well as the final balance for each account. Now, the key rule here is the total debits should always equal the total credits. All right? If they don't, then it means that something is wrong in the entries, whether it's in the transactions register or whether it's in the crops register, or then it means that something is wrong in the entries. So this sheet is very, very important because it helps you to verify that your system is accurate. All right? Okay. Now, let us quickly look at the financial statements. Now, from the trial balance, the system automatically generates your financial reports. All right? Now, the two main ones are the income statement, and the income statement is going to show your income, it is going to show your expenses, it is also going to show your profit or your loss. All right, so that's the first financial statement. So after the income statement, the next one that we want to look at is the balance sheet. Now the balance sheet will show you what you own, so your assets. It will also show you your liabilities, which is what you owe, as well as your equity. Now, these reports also update automatically as you enter the transactions. So just to recap the flow. So what happens is, we said that first of all, you record transactions in the transactions register. All right? And then this flows into all transactions register, into the all transactions register. Now, and then the trial balance, which is this one, summarizes everything. And from there, the financial statements are then generated automatically. All right? So everything is connected. And everything depends on accurate transactions entry. That's very, very important. So there are three key principles then to always keep in mind when using this system. Three key principles. Every transaction must be balanced. So every transaction must have an effect on at least two accounts. All right? Always use the correct account. That's the second principle. Always use the correct account. And the third one is you need to understand the difference between received and source. It's very, very important. Received is where is the value going to, and the source is where is the value coming from. So if you follow these three principles consistently, your reports will always be correct. So in the next video, we will go a little bit deeper into setting up and using the chart of accounts. We will look at how structure should be maintained, how to structure your accounts properly so that your reports are accurate and meaningful. Thank you so much for watching, and I will see you in the next session.